What's going on, guys? Welcome back to a new video on my channel. Today we have episode 34 of this series, Trading Supply and Demand for a Living, and I'm going to be breaking down a US 30 trade that I took today with the Signals Group. As always, if you want to trade with me every single day from Monday to Friday, New York session, make sure to join the Discord. The link will be in the description, and also don't forget to follow me on Instagram. The link will be in the description as well. So with that being said, let's get started with the breakdown. So US 30 today, guys. When I came into the market, US 30 was just consolidating in the beginning stages of New York, and then it had a nice push to the upside. With this push to the upside, we broke these highs that we had over here pre-New York, and we also broke London highs over here. We also broke above the 200 EMA, which we then came back below the 200 EMA, but US 30 rejected it very well, and it started coming back up once again. So whenever I saw that US 30 had a off the rip, I know that we broke highs. We are sitting above the 200, so I'm trying to look for a demand setup. The EMAs are not the best, especially on this trade, because you guys know I like to see the 13 at the top, 50 in the middle, and then 200 at the bottom. In this case, we had the 200 right there inside the demand, and then the 13 was above the 200, but the 50 was lagging all the way down here. When I went up to the 50-minute, I do see that we have the EMAs below us, and we just recently broke above the 13 and above the 50, and it held right there, as you guys can see on the 50 EMA or the 50 SMA as support. So whenever I saw that, that gave me some confluence of, okay, maybe the price wants to go up, at least maybe to retest that 15-minute 200 EMA. All right, that can be a possibility now that we have broken above the 50 and the 13 EMA. So when I saw that, I came back down to the 5-minute short, and I see that US 30 broke these previous highs. With that push, that red candle, the wick was above the previous wick right here. So that's a new higher high, and it also left a high probability demand right here, as you guys can see. So we have a gap in the market. For those of you that keep asking about gaps, right there from that red candle to the bottom of this red candle, that is a gap in the market that we need to fill. So that's a high probability demand. All right, so US 30 came back down. It tapped the zone. At this time, I already sent the signal to the Discord, and we are just waiting for the rejection and the entry, which the entry was going to be the break of that high of that candle. And then stop loss will go right there below the lowest point inside the zone, inside the demand. And then as soon as it came back down, it literally broke that the high of that candle, went super close to TP. In this case, my entry was a little bit lower. It was right here because US 30 gave the break of the candle, and then it rejected and came back down a little bit. So when I entered, my entry was like right here, and my TP got hit in this push. So I closed in this push, but I also sent it to a signals, and I'm like, okay, I know the candle break hasn't hit TP yet because it literally just started coming back down. Now it also had a demand right there that held. If you guys can see right there, that demand held with that candle, and then the rest was history. It just literally hit TP right there. So next candle just opened, went up, and hit TP. For the ones that got in at the break of the candle, even if I was in at the break of the candle, my TP would have been hit. I just closed on the first candle because my entry was a little bit below the break of the candle after that rejection. But yeah, it was a nice trade, and even runners I think went good. Yeah, it went up for a little bit. US 30 to retest at least that 200 EMA, as I was saying. It went above the 200, but we at least went to retest that 200 EMA, like I said, and I had on my analysis. Then this is the market open, which is completely crazy every time that we trade any like instrument like US 30 or Nasdaq or SPX. So then I took a second setup on my secondary account. Today the market was good, which I'm just going to break it down as well. First, let me show you the account over here. This is the secondary one. This is the primary one, which is sitting at $55,700, as you guys can see right there. And then now let me break down the gold trade that I took today on the secondary account for you guys as well. So the gold trade, I think it was a little bit later. Yes, right here. Which if you guys can see, We had a demand sitting right here, which I was waiting for on gold. Again, we're sitting above the 200, sitting above the 13 EMA, and we also broke some highs as well. We broke these London highs, and we also broke like these minor highs. So gold created a new lower low, and then it went up and started breaking highs and highs and highs and highs over here. So we're looking bullish, and we are above the 200 EMA. So the first demand that I had set up was this one, which we then tapped, and then it literally rejected and started going back up. As soon as it started going back up, I had the entry right there at the candle break, and then I was just aiming for a one-to-one on this second setup. Again, I didn't risk too much on this trade on the secondary account because I already came from a win on that US 30 trade, but this was looking good, and I felt like the market today was really good, so I felt like taking a second setup on the secondary account, not the main account. So I was already content with the profits on the main account, but on the secondary account I was trying to squeeze a little bit in, and then the rest was history. Literally rejected, gave the candle break, and went straight to TP. Closed my position at a one-to-one, and then gold literally reversed after that for the rest of the day. So this is why I love one-to-ones, man. Like many people keep asking me, hey, I cannot be profitable with one-to-ones. If you need 1 to 1.5, 1 to 2, go ahead and keep trying your stuff. But for me, 1 to 1 works because I have seen many times that we use spike, we hit the one on one, and then we completely reverse on the position, like in this case with gold. So really keep that in mind because there is a reason for the one to ones, all right? Trading supply and demand. And you also have a high win rate trading supply and demand. At least I have a 70% win rate, 70 plus. So I know that with a one to one, winning 7 out of 10 trades, I can be profitable. If you need more, because you're not that good, maybe you're winning only 4 trades out of 10 trades and you need 1 to 1.5 or 1 to 2, try to see a way that you can implement. Maybe you only take supply and demand setups that have higher time frames confluence, like the 1 hour or the 50-minute short. But if you are literally having 60 or 70% one to ones, a little bit over a one to one should be more than enough. All right, but yeah, that is it for today, guys. Hopefully this was helpful for you guys to learn a little bit. As always, don't forget that if you want to take these trades with me, the link of the Discord will be in the description. And with that being said, I'll see you all in the next episode. Take care.